I think with regard to US government debt, I mean, I think it's fair to say that you've seen across the board risk assets being sold off. I suspect that this is a reflection no more of positioning than actually a full-scale reassessment of US credit. I think what's rather more interesting, if we're talking about interest rates, is what's happening at exactly the opposite end of the curve, and the very fact that actually we have a market that is now starting to take into account the possibility the Fed doesn't go in December. That, I think, is actually the really interesting thing that's happening right now, because that clearly shifts so many different expectations over the next few months. I think what's really interesting for me when I look at this, though, is to look at the events overnight in the prism of what happened last June when we had the Brexit vote. Now, look, you know, I appreciate that this is something radically different in terms of politics. The US is not the UK, but in terms of the scale of moves, and so some of the things like the Nikkei, for example, some of the moves we've seen in dollar yen, at least earlier in the day, that looked like, you know, the sort of thing we were seeing back then. And the reason I raise it is this. You will also remember that over the course from June through till September, actually, we then had a period of calm. And I'm wondering whether actually from now and through to the inauguration, with a Fed that looks as though it's going to start easing rates or not going to hike rates quite as aggressively, perhaps actually we see a rush back into risk assets as people start to seek for yield.
But Simon, I suppose we did see an initial big move in things like the dollar, but very quickly those losses were paired to the extent now that the dollar is in fact up against emerging market currencies. It's hardly down against the pound and the euro. So outside of the move against the yen, the dollar's hardly softened at all. Is that not a big surprise?
Yeah, I mean, I think relatively speaking, certainly it's a reflection of the shift in sentiment this morning. But remember, I think one of the things that when you were coming out of the Asian session and into the European session, one of the big shifts, one of the big concerns was we actually weren't going to find out the actual results of the election, at least until tomorrow. There had been those comments out from Hillary Clinton's campaign manager saying, look, we're going to have to wait and see what happens. And therefore, when you saw actually Hillary Clinton coming out and saying, no, I have actually conceded the race, that was the point when you saw a degree of risk back on. And it may just have been people looking at what happened and said, fine, we are, you know, we are where we are. At least this isn't. Well, at least we have a degree of certainty. But I do agree that perhaps, you know, the rebound on the dollar against things like the sterling and the euro do seem a little odd. But I think all in all, if you take into account that shift in expectations by the Fed, my view is actually a little more dollar weakness is likely. The other thing you've got to remember is you did have on Monday and Tuesday central banks like the Swiss National Bank and the Bank of Japan implying that they would intervene if their currency strengthened overly much. And you had comments again during the late Asian session that perhaps Japan would be able to do something. So there may also be a little bit of degree of caution there.